Joined now by Paul Benson, CEO of SSR Mining. Paul, thanks for joining me today. How
My
are you?
pleasure. Very good.
Doing my research, SSR Mining comes from the old Silver Standard. 70 years in business. I did a double take on that. That is quite a feat.
Yeah, no, it's an unusual company. Gone through a period of change and evolution. Early, we got our name, the original name, Silver Standard, from the Silver Standard mine in British Columbia, which opened in the middle half of last century. When that closed production, went back to Explorer, late 90s, early 2000s. The business model was the silver land bank, holding silver ounces in the ground. Just again, with the evolution of the market, with the introduction of the streaming companies, etc., we evolved. We took the next step to become a producer. Started off 100% silver. Then with the acquisition of Marigold, it became 50-50 silver gold. Okay. Then with the acquisition of CB, became predominantly gold, and that's why we did the name change. Too many people were just focused on the name silver. So we changed the name to SSR, just the ticker code.
Right.
And I think that has been highly successful. People recognise us as a precious metals producer, not just a silver producer.
Yeah, and I imagine you agonized over that a little bit, right? Because 70 years.
Yeah.
Recognizable name brand, yet it didn't project the image that you wanted.
Yeah.
And so you've kind of threaded the needle very well by going with the ticker.
We agonised more around what name we would go to.
Yeah.
So we tried the usual things of a competition amongst employees, and that didn't work. And then finally we decided, well, we can keep the history by keeping the code. SSR was the ticker, and it has resonated. So I think particularly one measure we looked at was the amount of institutional shareholding. And if you go back 4 years ago, it was around 45%. Today it would be more than around 65% institutional shareholding. And absolutely, we put that down in part to getting away from just the focus purely on silver.
I see, okay. So I noticed this happened in 2017.
Yep.
You arrived in 2015 from Troy.
Yep.
Safe to assume that this was part of the vision, bringing someone like you in to help lead the transition?
Yeah, if you go back to 2015, we were at a crossroads. Marigold had just been acquired the year before, 2014, and was looking good. But we didn't know the future in Argentina. We were getting towards the end of the mine life, Paquitas. We only had about a year's worth of production. So it was basically saying, see what we can do over the next year or two to grow the company profitably. If not, to me, there's no reason to be a single asset company. You don't want a head office just on top of a single asset. At that point, you should auction yourself off.
Risk-wise?
Value for shareholders. If a head office costs a lot,
right.
And if you got it just on a single mine, if we were only Marigold, there's no point. So at that point, my view would have been we would have been better off auctioning off the company to get the head office cost out. Pleasingly, we're successful, first of all, in Argentina in extending the life there with the Puna joint venture, and also the acquisition of Claude Resources. So today we have 3 operating mines. And so it has been an evolution, but certainly part of a clear strategy, and part of the strategy was that rebranding. Once we saw gold becoming more dominant than silver, that was the right time to make that name change.
Talk a little bit about the evolution, because you talk about going from Silver Standard to SSR. This is sort of branding, perception, speaking to investors, getting someone like you with sort of the producer expertise that you bring. What about the technical expertise of a company? You went from land bank, basically a silver bank, to now intermediate producer. Did you have to restock? What are the technical expertise?
Yeah, sure. Interestingly, the way I frame it, there are 2 DNA strands that are quite strong in the company. Executives and management from both BHP and Placer. So if you look at that, go back to I think 2010. My predecessor, John Smith, came in as CEO, and that was really just when we'd become a producer. John came out of BHP. One of the directors on the board, Mike Anglin, was also BHP. John brought in a new management team, and 3 of them again came out of BHP. The COO and the person who became in charge of projects were the 2 key ones. So that was bringing in a lot of discipline, a lot of know-how, particularly focused on continuous improvement. Our CFO and our chairman at the time were ex-Placer, so again good DNA strand from companies that know how to perform and deliver and operate. I came in 2015. Before Troy, I was with BHP as well. So I spent 7 years with BHP. Before that, a significant part of my career with a mid-tier in Australia, Renison Goldfields. I'm a mining engineer by background. So again, it's bringing people to me, the balance is between what you can learn from a big company like a BHP. There are huge strengths that you learn there, but the risk is that you get the bureaucracy of a big company. And so I think the benefits of coming from experience from both mid-tier and juniors, you learn to be a bit more nimble. I think much more focused on the dollars that you spend. So I think there's a good balance there. But so we've had a management team that have come in focused on operational improvement. And I think you look at our track record, we've succeeded. There's also been a focus on exploration. So we have some good geologists who come from the gold industry, who've worked both in mines and exploration. And again, you see that in our track record of the exploration success that we've had.
The stock's been moving of late. Yep. So what's going on? What do you attribute that to?
Part of that story I said before, the evolution, I think the market has recognised what our company is. We're not a single asset company, so we have the benefit of portfolio diversification. We have 3 mines. In terms of political risk, very low political risk when you look at our peer group. Our 2 major assets are in Saskatchewan and Nevada, which are ranked in the 2 best jurisdictions from a mining investment perspective. We do what we say we're going to do. One of the biggest sins in this market is missing guidance. We're on track to meet guidance for the 7th consecutive year of both production and cash costs. I don't believe there's anyone else in our peer group who can say that. We also have best-in-class balance sheet. Too many companies have stressed their equity values by taking on too much debt. In this market, capital raising can be incredibly difficult. We've got a very, very strong balance sheet. Net gross cash over $400 million US, and the only debt we have is via a convertible note. Net cash closer to $200 million US. The last time we issued equity to raise money was 2010, so we haven't diluted shareholders. So I think it's when you add up all those things, that's when the market's starting to pay attention. I think at the end of last year, we're the 2nd best performer in the mid-tiers, only behind Kirkland, finished near a 52-week high, came off a bit in Q1 as funds sort of sell the 52-week high, buy the 52-week low. But after a bit of a drop in at the beginning of Q1, we've again started to pick up again. So I think we're again near we are at a 52-week high now.
Okay. News, June 27th, you announced the acquisition of 89 hectares contiguous to Marigold. A couple things, obviously contiguous, very significant, I guess, from a cost point of view.
Yes. If you look at the history of Marigold, we acquired Marigold in 2014. In 2015, we bought the property to the south east called Valmy. So that was a good land acquisition. This year what we announced was picking up the ground to the south, Trenton Canyon and Buffalo Valley, closed operations from Newmont. So they were no longer operating the mine. When they, for us, we have a very low cost mining method that we use at Marigold. We're able to turn material that's uneconomic for some of the majors into economic material for us. We'll continue drilling there. So, for us, it's one of those things that's a win-win for both parties. Newmont, we're doing nothing with it. We're very comfortable. We'll add value to it. So we're at that stage now. We'll do some initial drilling, really, just to confirm up resources that are there, and then step out and look for new resources.
Okay. Finally, Paul, I'm not going to ask you for a prediction on the gold price, but will you give me one anyway?
Yeah, sure. I can absolutely guarantee you that the gold price will go up, or it'll go down, or it'll stay the same. I can't be any more accurate than that. My own personal view is that, unfortunately, the central banks of the world are doing enough things which are very positive for the gold price. So I am bullish gold.
All right, Paul Benson, thanks for joining me. Appreciate it.
Brilliant. My pleasure. Thank you.